Welcome back to the channel. I am Algabot, and today we are studying an expert advisor for MetaTrader 5 called Opening Balance Reversion. This is an intraday, time-anchored mean reversion strategy built around a very old market idea, the opening balance of a trading session. In the next few minutes, you will learn how the strategy measures that opening balance from the first bars of the day, how it treats the midpoint as a kind of magnet, and how it fades rejected pokes at the edges back toward the center. Everything here is educational information only, never financial advice. So let us dig in. Let us start with the big picture. Opening balance reversion is a mean reversion strategy, which means it does not chase momentum. Instead, it looks for price to stretch away from a reference area and then bets on a snapback toward the center. The reference area here is called the opening balance. At the start of each session, detected from the bar timestamps beginning at the session start hour in coordinated universal time, the strategy watches the first set of bars and records their combined high and their combined low. That box is the opening balance, the zone where the day's initial auction discovers value. The key insight the strategy leans on is that the midpoint of that opening balance tends to act as a magnet for the rest of the session. Price often wanders out toward one edge, gets rejected, and drifts back toward the middle. So when price pokes an edge of the balance and is then rejected back inside, the strategy fades that move, aiming for a return toward the center. The single tool driving all of this, besides the price structure itself, is the average true range, or ATR. ATR measures recent volatility, and the strategy uses it everywhere. It uses ATR to decide whether the balance is wide enough to be worth trading, to define how far a poke can travel and still count as a rejection rather than a genuine breakout, to place the protective stop, and to time the break-even move. This keeps the strategy adaptive as volatility rises and falls. In terms of style, this is a patient, rules-based intraday approach. It takes at most one long attempt and one short attempt per session, holds only one position at a time, and always flattens by the session end hour, so there is no overnight carry. It is intended for liquid intraday foreign exchange charts, such as Eurist or GPUST, on a 15-minute time frame. As with any strategy, trading involves risk and losses do occur, so treat this purely as a study of the mechanics. Here is the exact logic, step by step. Everything runs on completed bars only, so there is no repainting. When a new calendar day is detected and the hour has reached the session start hour, the strategy resets and begins building a fresh opening balance. It then accumulates the first bars of the session. For each of the first OpeningRangeBars bars, with a default of 4, it tracks the highest high and the lowest low. Once those bars are in, the opening balance is ready, and the midpoint is simply the average of that high and low. Before it will consider any trade, the strategy applies a quality filter. The width of the balance, high minus low, must be at least the minimum range ATR multiple times the current ATR, 1 ATR by default. If the balance is too shallow relative to volatility, it is skipped, because a narrow box gives little room to fade. Now the entries. On the short side, the strategy detects a bar whose high reaches or exceeds the balance high, but does not exceed it by more than the maximum poke ATR multiple times ATR. That upper cap, defaulting to 0.75 ATR, is important because a poke bigger than that is treated as a genuine breakout and ignored, so the strategy never fights a strong trend day. The bar must then close back inside the balance and close below its open, a bearish rejection. When all of that lines up, the strategy signals a short. The take profit is placed a target fraction of the width, 60% by default, back in from the poked high, and the stop is set a stop ATR multiple beyond that high. The long side is a mirror image. The bar's low reaches or dips below the balance low, but by no more than the same maximum poke, then closes back inside and closes above its open, a bullish reclaim. The strategy signals along, with the take profit a fraction of the width up from the low and the stop just below it. Finally, position management. Only one position is held at a time, and only one attempt is allowed per side per session. Once price travels the break-even ATR distance in the trade's favor, the stop is pulled up to the entry price to protect the position. And at the session end hour, everything is closed, keeping the strategy flat with no overnight exposure. Let us read the MQL5 as if we were in Meta Editor. At the top are the inputs. Session start hour and session end hour define the trading window in coordinated universal time. Opening range bars, defaulting to 4, is how many bars build the balance box. ATR period sets the volatility measure. The minimum range ATR multiple is the width filter. The maximum poke ATR multiple caps how far price may exceed an edge and still count as a rejection. The target fraction places the take profit inside the balance, and the stop ATR multiple sizes the protective stop. Now the sell block, shown first. The condition checks that the just closed bar's high reached the opening balance high, that it did not exceed it by more than the maximum poke, that the bar closed back inside below that high, and that it was a bearish bar with close below open. When all 4 are true, the code reads the current bid, sets the take profit at the balance high minus the target fraction times the width, and the stop at the balance high plus the stop ATR multiple times ATR, then calls trade.sell. The buy block below is the exact mirror. The bar's low reached the balance low without exceeding the poke cap, closed back inside above that low, and was a bullish bar with close above open. The code reads the ask, sets the take profit at the balance low plus the target fraction times the width, and the stop at the balance low minus the stop ATR multiple times ATR, then calls trade.buy. Both sides fade the edge back toward the center. Let us walk through this chart candle by candle and see the strategy in action. On the screen, you can see 3 dashed horizontal lines. The upper red line is the opening balance high at 1.0880. The lower green line is the opening balance low at 1.0850, and the gray line in between is the opening balance midpoint at 1.0865, the magnet the whole strategy is built around. Look at the first 4 candles. This is the opening range forming right after the session start hour. During these bars, the strategy simply watches and records. The highest high of this group reaches up to the balance high line, and the lowest low dips down to the balance low line. After those first 4 bars are complete, the opening balance is set. Its width is comfortably wider than 1 ATR, so it passes the quality filter, and the midpoint is locked in halfway between the 2 edges. No trade yet. The strategy is just building its reference box. Now watch the next couple of candles drift lower, back down toward the green low line. This is the setup for a long. On the 6th candle, the one carrying the buy marker, price pokes just below the opening balance low, but only slightly, well within the maximum poke allowance of 0.75 ATR, so it is treated as a rejection and not a genuine breakdown. Crucially, that same candle then closes back inside the balance and closes above its open, a bullish reclaim. That is the exact condition the strategy is waiting for on the long side. The buy entry marker fires here. The protective stop sits just below that rejected low, and the take profit is set 60% of the width back up toward the center, near the midpoint line. Follow the next 2 candles. Price lifts away from the low and climbs steadily back toward the middle of the balance. Exactly the snapback the midpoint magnet idea predicts. On the 8th candle, the move reaches the take profit target, and the long trade is closed for a gain in this illustration. Notice how the entry was near a fresh low and the exit was up near the center, a clean fade back toward value. Now the second half of the session offers the mirror image, a short. Watch price push higher, up past the midpoint and toward the red opening balance high line. On the 10th candle, the one with the sell marker, price pokes just above the balance high. Again, only slightly, and within the maximum poke cap, so it counts as a rejection rather than a breakout. That candle then closes back below the high line and closes below its open, a bearish rejection bar. This is the short condition, and the sell entry marker fires. The stop sits just above that rejected high, and the take profit is placed 60% of the width back down toward the midpoint. Watch the final candles roll over. Price eases lower, away from the high and back toward the center of the balance. And on the 12th candle, it reaches the take profit target near the midpoint line, closing the short in this example. Once more, the strategy entered near a stretched extreme and aimed for the middle. And remember, had either poke pushed far beyond an edge, past the maximum poke distance, the strategy would have stood aside, refusing to fade what could be a real trend day. That balance of fading edges while respecting breakouts is the heart of opening balance reversion. Of course, not every rejection follows through, and losses are part of trading, so this is purely a study of the mechanics. So that is opening balance reversion from start to finish. We saw how it builds an opening balance from the first bars of each session, why the midpoint acts as a magnet, and how it fades rejected pokes at the edges back toward the center while stepping aside for runaway breakouts. We covered the ATR-based stops, the fractional take profit, the break-even trail, and the strict session rules that keep it flat overnight. Remember, everything in this video is educational information only and is not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling me which strategy to study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.